As an emerging market investor then,
Right.
Ruchir, what would the India call be today then?
Well, I think that, as far as India is concerned, we have pulled back in terms of the fact that it's a very difficult time to be in many countries because there are very few countries where the prospects look any good. And there's one statistic which captures this to you, for me. In the boom period of 2003 to 2007, there were about 50 to 60 economies in the world which were registering a growth rate of 7% or more every year. This year, that number is down to 5 or 6. So, economic growth is lower everywhere, and in particular across the emerging world. And instead, what
But relatively, we're still doing better.
No,
right?
but I think this is where I think that we are missing the point. Markets and investors respond to change, not to absolute levels.
Sure.
In the developed world, economic momentum is coming back. Like the United States, the dramatic improvement in sentiment since Trump got elected on the marketplace is staggering. I mean, no one would have expected that.
Record highs for the Dow.
And apart from that, you look at all the surveys, consumer confidence, business confidence, massive bump. And the rally in the US stock market today, I think I saw this data. Currently, this is the best rally that the stock market has enjoyed after the election of any president in American history.
Wow.
So this is like really sort of huge surge in animal spirits going on in the United States. And the other surprise is Europe, an economy that people had written off. Even their economic momentum is accelerating. Japan too is coming back from the brink. So in the developed world, what we're seeing is economic momentum is coming back.
So now, that's bad news then for emerging markets in terms of flows?
Yeah, in a way. And I think that's what we are seeing currently, which is that the dollar is supreme.
Yes.
And the only giant sucking sound we have heard so far is basically of money going back to the United States.
Yes.
And I think that is something which doesn't bode well for flows to emerging markets. But I think there's a more fundamental problem out here, which is I think that the emerging market growth model is sort of under serious question. And this is what I was going back to my earlier point about the Trump presidency. Because there are two changes that they are going to make, or are very serious about making. One of them will go, I think, pass for sure. The other one, I'm not sure. But this has major implications for India. Take the first thing, that they're going to reduce the corporate tax rate from a rate of 35 or something they're talking about there to 15 or 20%. This is huge because here is the largest market in the world which is reducing its corporate tax rate from 35, I mean the effective rate is a bit lower, but 35 is the top rate, down to let's say 15, 20 or something. That is huge, because why would anyone then want to invest outside their domestic market when, and it's so large, when the corporate tax rate is being brought down so dramatically?
So then it's not an issue just as far as FII investment is concerned, but even FDI investment for countries like India.
So therefore, as far as India is concerned, this is what I even said 2 years ago, that one of the first things India needs to do is to bring down its corporate tax rate. Because if you don't want to make in India...
Well, the roadmap is 25% that the finance minister laid out in his first budget.
Yes, but that was very incremental. And now, I think that if you do not do something dramatic on corporate tax rates...
what would dramatic be for you? What would be dramatic enough?
If the United States is going to reduce its corporate tax rate to 15 to 20%, and if you don't bring it down to at least a similar level, I think that's going to be big trouble. Why would you want to sort of set up plants or factories out here, or at least why would a US person want to do it if the corporate tax rate in the United States is going to be 15, 20%? So I think that's that is a major change which is taking place.
You think that the government ought to bite this bullet even in this budget?
Absolutely, because I'm saying that, and this is where I think that this is where you have the long-term consequences of demonetization. Because what's happening today is that the focus is now shifting about what SOPs to offer to try and sort of make up for whatever hardship that the poor have gone through. And the sentiment has been a bit more sort of anti-rich, like soak the rich kind of sentiment.
But so in that context then to do a significant corporate tax rate, you believe will be in question?
Yes, I think so. But I'm saying, but this is like, for me, the economic necessity. This is the need of the hour, that you need to match those corporate tax rates, because the US used to have one of the highest corporate tax rates in the world. And now from 35, we're going to go to 15, 20%. That is like a dramatic shift. And if you don't match that, that's going to have serious implications there. So that's one. And the second change, so the corporate tax rate cut to 15, 20%, I think there's a very high probability that's going to happen next year
in the US.
Like in the US. The second is much more controversial, but with even greater implications for India, which is that they're discussing something called a destination tax.
Yes.
The destination tax implication is that they're going to sort of basically exports are going to be sort of tax-free and imports are going to be taxed. That's a very crude way of putting it, but that's what they're talking about. If that were to go through, that would mean the entire outsourcing model of to emerging markets, or even the sort of exporting your way to prosperity model, which is how many emerging markets have grown very rapidly, Korea, Taiwan, China, that model is going to be seriously impaired. So the development ladder...
But this impacts the US economy itself, doesn't it? So
It
do
does.
you believe that this is going to be something that perhaps they will, temper?
Yeah, so this is like something that they're facing a lot more opposition for. But I think what's very clear is that America, from an economic standpoint, is turning much more inward.
Yeah.
It's about how do we get investment back into our country, because investment has been so weak out there for a long period of time. And you have a very business-friendly government that's come into place just now. You have a
Yes.
whole bunch of businessmen out there who are basically
Former Goldman Sachs executives, yes.
yeah, but like much broader than that. I mean, so you have the most this is the most business-friendly government that America has had in a long time. Some people possibly say ever, and they are very focused on these kind of things, how to get investment back in, lower corporate tax rates, possible border tax, repatriation of overseas earnings, profits. So that's the direction in which they're moving. Now, eventually, you can argue that America can't live in isolation. If the rest of the world doesn't do well, the dollar surges too much, that's going to hurt them. But for the next year or two, that is the dynamic. That's what's going to happen. And I think that this is where we need to just wake up, which is that to get out of our insular mindset and say that this is how the world is changing. How do we respond to this change?